So we're going to start New South Wales and then sort of start drilling into the LGA, then going down into the area. But the area that Brett sent in is Budgewoi. And so we've already explained a little bit about Brett's question here, mate. But do you want to start us off with how's New South Wales looking?
Yeah, well, firstly on this area, I actually know it pretty well.
Yeah?
My family has a business there. So my dad has a mechanic workshop a couple suburbs away.
There you go.
I've been traveling there a lot back in the day. So it's close to home, but not close to home geographically.
Okay. All right. So you really know it well.
Yeah, well, I mean,
Brilliant.
look, New South Wales to begin with, firstly, I think the key thing to look at New South Wales, population growth has been very strong.
Mm-hmm.
If we're looking at sort of 10-year growth, we're looking at 12% in terms of that annual rate is now just under, 1.2%. So taking it up to 12% growth rate in terms of population. So that's pretty solid. If we're going to unemployment trends in New South Wales remain very tight at about 3.2% and been trending down for years like most of the country.
Mm-hmm.
But I think the downside of New South Wales right now has been just as a state, it's still losing a lot of people to other states. Now, migration alone, interstate isn't a huge driver in isolation because it does welcome a lot of people into New South Wales from overseas. But New South Wales interstate migration has been on the lows and has been declining for some years and not so positive. But that's more of a high level of New South Wales and the analysis there.
What do you reckon it is? Like even just anecdotally, you're a New South Welshman. Like
Yeah.
it's a lovely spot. What do you think is like the shine's been taken off it a bit, or the affordability side? What do you reckon it is?
Look, it's hard to put my thoughts on it. It's very anecdotal. I think one of the bigger drivers of people movement is definitely affordability with lifestyle.
Okay.
Right. So I think that lacks in New South Wales. There's lifestyle, don't get me wrong, but you could go up 3 hours from a main city, 5 hours from a main city, 10 hours from a main city before you touch Queensland, and you're still paying some pretty serious prices for properties that might enjoy some lifestyle. Now, if you're finding some unique spots in the tree change areas, then you might find a little bit more affordability.
Mm-hmm.
But overall, New South Wales is not a cheap state. So I'm just putting my initial thoughts of why it might be losing some people. I'm sure affordability has a place to play in this.
Okay. And so as far as LGA side of things is concerned, we're looking Central Coast area?
Yeah, so we're looking at Central Coast, which is obviously that close to home. And I own a property in Central Coast too, so I know this area quite well.
Nice.
Not specifically the suburb of Budgewoi, but with regards to Central Coast, there's a few trends emerging in this greater SA3. And we call the SA3 of Central Coast for this region, Wyong. And for those who've been tuning in, they know SA3 is essentially a cluster of suburbs just for me to get cleaner data. Right?
Yep.
Now, the Wyong SA3 has had some declines in recent times. I feel that is more of a New South Wales regional center thing, though, that has been more, I guess, happening in the coastal areas. Currently, our data suggests that there's been 5.3% price declines over the last 12 months now, going back for New South Wales area of Wyong, which is the SA3 region. This was quite common. If you actually go from the coastal regions, going from Central Coast all the way up to Byron, prices were declining for many areas over the last 12 months. I feel like they've found a little bit of a floor now and are starting to recover, but the price itself has gone backwards whilst the rest of the country's gone forward. Now,
I was just going to say, do you think there actually is any weight to the whole talk about bosses are saying, nah, get back in the office? And is that a factor, or is that, again, just more anecdotal kind of media headline?
I think that's a little bit more anecdotal media headline. I do know that there has been some people who've obviously felt that, but overall, when we look at Regional Australia Institute data, which talks about people movement, and they're tracking that with CommBank as well with spending data, some of the things that they're finding is that, yes, people movement has taken a back step regionally from big cities and going to the regions, but it's not as much of a back step like we're below pre-COVID times. We are still well above pre-COVID times from people moving from the capital cities over to the regions, especially in like New South Wales. So I wouldn't say that reason alone is cutting these prices down. I'd say it's a combination of just having a lot of good growth, and this is fairly normal. You know, cities don't grow a lot and do so forever. I think when you look at 10-year price growths of this region, Wyong has had 121% capital growth over the last 10 years.
Pretty healthy.
Right, and take a look at Budgewoi as part of that Wyong review, it's 148% over the last 10 years. So when you think of that, these are massive per annum averages, almost double their 20-year average. So if it's almost double the 20-year average, you can't sit here and say, as if it can't have a bit of decline. Hey, you know, if you owned a property here 10 years ago, you won't notice a 5% decline.
So it's kind of like a don't throw the baby out with the bathwater.
Absolutely. And then if we look at other factors that determine local demand of Wyong, I like to also look at vacancy rates, right? So vacancy rates for Wyong right now are pretty decent. They're at about 0.8% when it comes to vacancy rates. And so as a region, that is pretty tight. When I think of vacancy rates for Wyong, that means that demand is still strong, because rental demand is true demand, right? If there is housing available for rent, no one is speculating on rent. Like there is no, I'm going to buy here because I think it will grow. You don't go to a rental property and go, wow, beautiful home. Can't wait to pay more rent for the future. You don't do that. So when you're actually looking at tight rental markets, it's because it's in demand and there's less available supply. So it's not like living there is out of demand like you wanted to know about earlier. It's more just maybe it's had a lot of growth. People are cashing in and people are more considerate of buying about how much growth it's had, and the prices are getting pretty up there. It's not cheap.
And realistically, when an area comes off what you've just said here, 148% growth, it doesn't just like flatten out perfectly either, does it?
Yeah, it doesn't flatten out perfectly. I mean, it won't decline heavily because it's not some huge economic drain where there's all these people leaving and no work is there and unemployment's skyrocketing. People are losing their homes because of mortgage repayment issues. That's not the case. Sometimes it's just people's determining of what they see value in and what is available and what they make choices of what's available. So I don't think it's going to be some market that goes into deep decline for many years. But after that much growth and with some of the trends in play, well, it just becomes a little bit harder for locals to keep purchasing there.
Makes sense. All right, so if we're drilling further down into Budgewoi and to get a little bit more in detail for Brett's question, how's it actually looking as a suburb?
Yeah, as a suburb, I think the first thing to know is that Budgewoi is one of the more affordable suburbs in the Central Coast region of Wyong. And so when you've got that affordability in comparison to the rest of the areas, that will be popular. Now, locals know it for a little bit of a rougher demographic than some surrounding parts of the Central Coast. But hey, that also comes with a slightly cheaper price tag. And as I've also mentioned before, like Budgewoi has actually performed really well over the 10-year period. So to get deeper into Budgewoi, there's a few trends that are for the positive and some not so good.
Okay.
So I think the first parts that weren't so good was how large that 10-year growth was that I pointed out. And the second one was the current momentum. It's been declining just over 5% as well in the last 12 months.
I feel like we've got a few people scratching their heads right now, Arjun, going, what do you mean it's bad that there was 10-year growth that was really large?
Yeah, so it's not that because of that, the growth cycle's just immediately over. It's usually that if that happens, it flows on to a few other data points eventually. And when those data points show, it's less growth ahead is likely. Okay. And so, for example, if growth is heavy, a group of buyers may see less value in it. And let's call that group of buyers investors. And that investor group of buyers will also see that rental yields aren't that great. And then the group of buyers will also feel like they've missed out on a fair few. So they're not all the buyers. Investors should never represent everything. But let's just say that's 1/4, max 1/3. Now that buyer comes off. The second group of buyer base is renters. If they see growth has outpaced rental price growth a lot and the renters are transitioning to buying, they might not see as much value in buying because the rental yield is quite low in comparison to buying in that area. So renting's still a pretty good deal in their eyes, and they'll eventually get to it when they can, right?
Because like I can own this thing for $2,000 a week or rent it for $1,000 a week or whatever it is. Like,
that's right.
Yeah.
I mean, many aspirations are still there for buying. Let's not like say that they don't want to, but I think it's just also the math is harder to make right.
Yep.
Right.
Getcha.
And then the third and final part is that owner occupiers are competing. And when they've competed to such a level for such a long period, then it's kind of like, hey, how much can I keep competing? And so it just becomes a bit of fatigue kicking in. And then combine that with people wanting to cash out with more choice available, then it suddenly doesn't have that same pressure on it. And that's why you can see, I believe that that's a big reason as to why it's quieted down or calmed down in recent times. But what's interesting in the stats, and this might lead to some positive recovery in due course, is that rental growth is booming. We are seeing double-digit rental price growth. In the last year alone, it's close to 18% rental growth, which is massive, right? So there's a statistic called rental yield, and rental yield grows when prices move slower than rental growth. Or prices decline, rental growth stays the same. And so that's a phenomenon that's happening because you're having prices decline, but also on top of that, you're having rents boom. And so eventually that formula of renters looking at it and going, I'd want to consider this, could be coupled with interest rates coming down and it becoming more affordable, coupled with suddenly you go, well, as an investor, this is pretty good yields for a location that used to be known as a low yielding location. And that's what happens when yields keep rising. So I would say that if the yields continue to rise at this level and you want to expose yourself to the Central Coast market and you feel like you don't have something, then you want that, then eventually you put lowering interest rates, increasing affordability, increasing rental yields, and rental pressure frustrating tenants, then you start to see them flow onto the buy side. And I think this positively impacts the suburb. That too is one of the cheaper suburbs amongst this region of Wyong.
Because then it's that opposite effect. Instead of it being like, okay, I can buy it for $2,000 a week or I can rent it for $1,000 a week, it gets to that point where it's like, wait a second, I can probably buy it for pretty much the same price I'm renting it for. Maybe not exactly the same, but then all of a sudden a whole pool of renters become purchasers. That's what you're saying for
you're
that
raising
section.
A really good point here, because see, rental yields right now for the region of Budgewoi is about 3.8%.
Okay.
Now take it back a year, that was closer to 3%, 3.5%. So these are huge jumps in yield occurring. Just imagine even 2/3 of that yield jump in the last 12 months occurs again for the next 12 months. All of a sudden you've got 4+% yields, 4.5%. Now, 4.5% yields might not sound amazing to someone in regional Queensland, but 4.5% yields in regional New South Wales, in commutable drive to Sydney, and on a beach location that's gentrifying, suddenly, like on prices too of 700-800K, suddenly that's a pretty good number. So I would look at this location in one of two ways. I would say if you're looking at short-term growth trends, and with these short-term growth trends, you're looking for the best bang for your dollar at, say, a 700 or 800K budget, then I just don't see this as it. Because right now you've still got declining prices, you've still got days on market increasing, you've still got discounting increasing, and you've had a lot of growth. But then if I dial that short term from say 1 to 2 years up to 3 to 5 years, and I would say, well, rental yields keep rising, prices get more affordable. It's had a bit of a slow growth period in recent years, although 10 years is huge, but slow in recent years. Add on a few more years of slowish and sluggish growth. And inventory is not like crazy high. It's not like supply is so high that this should be deafening and weak and it's not going to have anything happen. Suddenly you beat the pack that gets there when yields go up again and interest rates come down again. You might like it for a 3 to 5 year hold. But if I'm starting to take a look at this from the 0 to 1 or 0 to 2 years, I just don't see any massive trends showing right now that get me excited. However, if buyer sentiment changes, there's not a lot of stock for sale that could very quickly erupt the market for a positive growth cycle. But right now, it's not showing any signs of immediate growth cycle in the next 12 months.
Well, as far as Brett's question's concerned around short-term, medium-term growth and what it's really looking like for Budgewoi, I feel like you've very much answered that question. But as far as the is it a no, is it a go, it sounds like it's a go longer term and it's a no short term. Have I read you right?
Yeah, it's a no for the next 1-2 years, but it turns into a yes from a 2 to 5 years. If these yields keep rising the way they are, it will attract many people back into the market.
You can't say yes. You got to say go. It rhymes, Arjun. Go and no.
Go no. Yes, no. No, probably not.
Arjun Paliwal, Head of Research of InvestorKit. Thank you so much for jumping on the show, mate.
Thank you so much.